Good evening, and thank you for joining us for our first Plan Giving webinar. My name is Hilda Mason, and I serve as the Plan Giving Manager at HistoryMiami Museum. In July of 2023, I will have been with the museum for 35 years in various roles, but now I'm playing my favorite role, and it's reaching out to our amazing supporters and members to show them how Plan Giving can benefit them and the causes that they care about. Today's presentation will be recorded and a copy will be sent to you. This webinar offers ASL interpretation, and special notices of interest will appear in the chat section during the webinar. Please type your questions to be answered in either the Q&A or chat features, and our staff will direct them to the speakers. And if your question is for a specific speaker, please name them in your message. Steve and I are both happy to answer your questions live as you type them in. You don't have to wait until the end. And time permitting, we'll have a little bit of Q&A at the end in case something comes to your mind a little bit later on. And now I want to introduce our presenter, Stephen Schwartz. Hello, Steve.
Hi, good evening to you all.
And thank you for being with us and for sharing your many years of experience and knowledge with our friends. Can I tell our guests a little bit about you, Steve?
Of course.
Sure.
Who likes not to hear something about themselves?
There you go. Stephen L. Schwartz is a principal advisor for Philanthropic Visions, a consulting firm specializing in nonprofit organization capacity building, board development, fundraising strategies, and advising donors and their professional advisors in structuring philanthropic investments. His fundraising and community engagement experience includes service as FIU's Executive Director of Estate and Plan Giving, Development Director for the University of Florida, Executive Board Member of Philanthropic Miami, and volunteer leader for numerous community-based initiatives. Stephen's academic credentials include law and business school professorships at the University of Michigan, University of Florida, Michigan State University, and University of San Francisco. He has practiced trial and appellate law in state, federal, governmental, and international tribunals for over 45 years, and has served as a founding fellow and past president of the International Academy of Mediators, mediating and arbitrating hundreds of conflict situations. Steve, I turn the webinar over to you. Can you please dispel the mysteries of Plan Giving for us?
I'd be delighted to do that. I'm kind of interested in meeting the person that you just described. I'll just sit here and wait till he shows up. And it was quite an impressive person. Meanwhile, let's ask the question, which is, why should you be interested in Plan Giving? Why should anyone really be interested in it? And I think the answer to that really is as individual as it is, in a sense, kind of profound, and on the other aspect of it, very simple. There are so many different things that Plan Giving can do for an individual who's interested in supporting their favorite charity. And of course, hopefully that might include History Miami. For example, a way of supporting you, the museum, is by way of helping you produce results, not only for yourself, but for the museum. And there are a number of ways that this actually happens. For you individually, Plan Giving provides a path for protecting your personal wealth. It's a way also that can help you achieve favorable taxation, whether it's income tax or estate tax. It can provide ways of assuring and ensuring retirement security. And it's certainly a way of fulfilling personal wishes and desires that you have in ways that you'd like to support the museum or your community. It's also a methodology for being able to provide family security for individuals that you are close to, individuals who may have special needs, or simply members of your family that you want to include one way or another in your plans. I think Plan Giving is also an excellent tool for having an impact in our community. And in these days of trying times, as we look around our community here, certainly here in Miami and elsewhere around the country, are things we would want to be able to impact in a very positive way. So that's something you can do through Plan Giving. And I think lastly, there are those of you, and I would include myself included, who would like to leave some kind of philanthropic legacy. That is, we all would like to feel that we've left things in a better shape than we found them. And certainly planned giving is one of the ways that can happen. I'd like to move on for what might be the next technique, and that is some concerns about myths about charitable planned giving, and there certainly are a lot of them. One is that it's very difficult and time consuming. And as you're going to see in a very few minutes, there are some very, very simple things that you can do and a very little time consumption involved in them. Some people think that you have to have a large estate in order to make a planned gift. And simply whatever you own is considered to be part of your estate. It's an automobile, it's a house, it's a stamp collection, it's your favorite art picture that's hanging in your living room, it's a stamp collection, it's simply, cash in the bank for that matter. There's also a myth that people feel that you can only make a planned gift if there are no children. Because the concern is, if I have children, then certainly I want to include them in my estate. And if I include them in my estate, then I can't leave anything for charity. And the other side of that is, if I leave something for charity, then I can't leave anything for my children. And as I think you're going to find, neither of those is the case. People do not make planned gifts simply to get tax benefits. So that is certainly one of the benefits that you can look for. And if that's something that you have in mind, then yes, a tax benefit is possible. There's also this myth that people think, well, a planned gift is just a deferred gift, which means it only comes into being at a later point in time. And this isn't really true. There are a variety of planned gifts that you can make right now, some of which allow you to retain the asset that you have. Others are simply those that you can give at a later point in time. And sometimes I hear people say that, well, I really don't have very much money. I have a small estate. And isn't planned giving really for only people who have lots of money? And I think that's not really the case. Every one of us has the ability to make a planned gift for whatever it is that we have that might be of value. And we can look to see about what that value is and convert it into a planned gift. As I mentioned earlier, some people think that you have to pick between your family and a charity, between your children and a charity. And I think you're going to find, as we go through the planned giving techniques, that's not the case. And lastly, I think one of the myths is that, well, I'd like to continue giving now, but I really can't do both. And I think you'll find that there are planned giving techniques that do allow you to, in a sense, have your cake and eat it too. So what are these planned giving techniques, and what do they do, and when, and how do they work? So I'm going to start by giving you, kind of breaking them down into some categories. And in those categories, I will identify for you some of the types of assets that can be used. And then we'll move on to another category, and another one, another one, and another one. And when we've kind of gone through the general discussion, I'll get into a little bit more detail about the specifics about how each planned giving technique works. I'd like to talk about one of the easiest methods of planned giving. It's for anybody, it's for any time, and I call it with no fuss and no muss. And it's also one that can help you save taxes. And this ranges from pledges, cash, some now, some later, immediate gifts that you might be able to give, stocks, bonds, real estate, personal property, retirement plan beneficiary designations, IRA beneficiary designations, bank account beneficiary designations, investment account beneficiary designations or ownership transfers, and life insurance designations. Now, in each one of these, as we'll see, it's simply a matter of including or adding or filling out a form that is made readily available by any of the institutions or any of the organizations that hold your particular asset, and simply instructing them on paper that I'd like to make History Miami, for example, a beneficiary. So that's one class. It's the easiest ones. There's no fuss, no muss. Doesn't really require even talking to a lawyer, professional advisor. But I will repeat many times throughout our conversation here this evening that of all the things that you want to do, you want to talk to Hilda at History Miami to make sure that whatever gift you want to make is acceptable, can be accepted by the by the museum. And also that you want to include your professional advisors. These are people who have your best interests at heart, and they want to make sure that whatever you're doing is consistent with the plans and strategies that you plan for your estate planning. Moving on to the next category, these are planned gifts that you can make from your will or a trust to benefit of a charity, and these take place later. Now, you include them in your will and your trust now, whatever the asset might be, but the benefit does not pass to the charity until the will or the trust matures. The next category are planned gifts that can give you back money now. Interesting, but I bet many of you never really thought about that. It can minimize your taxes and can also will benefit the charity later. Now, these become a little bit more complicated. They do involve a little bit more professional involvement, and they are called the Charitable Gift Annuity and the Charitable Remainder Trust. The next category that I'm going to discuss just generally are planned gifts that can benefit the charity now as opposed to later. They can give you money back later as opposed to now, but in either case, they can help you minimize your taxes. And this type of planned gift is called the Charitable Lead Trust. Moving on to the next category, it's a planned gift that can give you back money now, minimize taxes, and benefit the charity later. And this particular technique involves a life estate in your home. And briefly speaking, what this means is you can title over your home to the charity. They get the benefit of the ownership, but you get to live there as long as you want or until the gift matures, and you do get the benefit of a tax deduction. Now, having gone through these categories just generally, I'd like to get into a little bit more specifics. And with each one of these specifics, I'm going to talk about what it is, who is the donor, and what is the gift, and where it goes. I'm going to check real quickly here, just to make sure that we don't have we have some questions that are showing up already, and I don't want to have people wait. I see, yes, okay. There are a couple of questions that I can hold for the moment, so please be patient. So the first category that I talked to you about were gifts that can be given by anyone, anytime, the no fuss, no muss type. And one of these is simply a pledge, and it's an immediate gift. And what happens here is the donor makes a pledge. It can be personal property, it can be real estate, it can be stocks and bonds, and this is called the gift. The transfer goes to HistoryMiami. Now, that gift goes to HistoryMiami now, right away, without any muss, without any fuss, without any delay. And because of that, because you're parting with the ownership, the Internal Revenue Service allows you to take an immediate tax deduction. And that's why we call it an immediate gift. The next type of immediate gift would include the categories of things such as IRA transfers. And everyone who has an IRA knows that at some point, when you reach of a certain age, there's a required minimum distribution. Now, it used to be that required minimum distribution was taxable to you, and then you could take the amount that you were receiving and you could donate it to the charity, and at that point, you get the tax deduction. But now, what has been occurring in the change of the law is you can make your required minimum distribution directly to the charity, and there'll be no tax consequences for you at that point. You can't take a tax deduction, but you also don't have to pay any taxes. For those of you who have retirement plans, you will know that in your retirement plan, you had to designate a beneficiary. So if you have a retirement plan, you're the donor, you can make a gift of that retirement plan, a part of it or all of it or a percentage of it, by making a change in your beneficiary form. That is the gift. Having changed the beneficiary to HistoryMiami, they are now the beneficiary of your gift. Now, you can have multiple beneficiaries in your retirement plan. So just because you choose to make a son or a daughter, an aunt or uncle, your spouse, a beneficiary, doesn't exclude you from making a beneficiary for HistoryMiami as well. And by making the beneficiary HistoryMiami, You're also not excluding the ability to make a beneficiary of those other individuals that I've mentioned. Now, the same thing takes place with the bank account beneficiary designation. Those of you who have a checking account or a savings account can certainly know that when you filled out the forms, the bank asked you to designate on your form whether you wanted to make a beneficiary designation or whether you were the sole beneficiary. So here again, if you chose to make History Miami a beneficiary of a bank account, all or a portion of it, you would simply fill out the form that the bank makes available, designating History Miami as a beneficiary, and you're on your way. That's the gift, and History Miami is now a beneficiary. It's a gift by anyone, anytime, no fuss, no mess. Let's talk about the next category, life insurance beneficiary designation or ownership transfer. For those of you who still have life insurance policies and watch TV, occasionally you've probably seen that an advertisement that says, if you have a life insurance policy and you want to cash it in now, you can do that. And we will give you the cash. That's one way of doing it, but you're not going to get a tax deduction for that. And you're also not going to be able to support your favorite charity or do anything helpful for the community. So one way of helping out is when you fill out your life insurance beneficiary designation initially, the insurance company asks you to designate who the beneficiary or beneficiaries are. Similarly, you can change your beneficiaries in your life insurance policy to add beneficiaries, and you can make them a percentage holder or percentage owner of that life insurance benefit at the time that it matures. And when you do that, you can do it right away. There's no fuss, no muss. That's the gift, and History Miami becomes the beneficiary. Now, for those of you who actually would like to transfer the ownership, there's an added benefit. And that added benefit, if you actually change the ownership to History Miami, you get a tax benefit for a portion of that fair market value or the life benefit that comes at the time of maturity. It's a cash value that's paid. And so by transferring the ownership, that cash value now gets transferred to History Miami, and you get the opportunity to take a tax deduction for that transfer of ownership. If we move on to the next category of types of plan giving vehicles, I mentioned that it can be done from your will or your trust. Now, I would say that a very large portion of gifts that are made to charity are done through individuals' wills or through their trusts. And there are a number of reasons for that. One is that you can make the designation of your favorite charity, History Miami, in your will or your trust, but it won't take effect and it won't impact your assets that you own. Not until the point of your passing will that bequest or that trust, whether it's a will or a trust, take effect. So the benefit, of course, is that everything that you own remains in your estate. You use it, you dispose of it, you keep it, you buy it, you sell it, whatever you want to do with it. And it's only at the time that the will or the trust matures that that beneficiary designation takes place. Now, some people are concerned here too, as I mentioned, so far as some of the myths, that if you have designated in your will or your trust, your various family members or friends, that you can't also designate a charitable beneficiary. That's not true. You can add a charitable beneficiary and not disturb the beneficiaries that you've already designated. So your son, your daughter, your house, your wife, your husband, your aunts, your uncles, whomever it is that you've designated as being the beneficiaries still remain. And History Miami can be also added. Usually this, however, will require you to do a little bit of paperwork. And it's most often recommended that you consult your attorney who prepared your will or your trust in the first instance and talk with them and say, I'd like to add History Miami as a beneficiary to my will or trust. They will want to have conversation with you about whether you want to change any of the other beneficiaries. or whether you simply want to add the museum. And once you've completed that conversation with them, they'll do the paperwork, and it requires simply a signature on your part to bring it into effect. So you're the donor. Your will or your trust now includes a beneficiary designation. And if it's History Miami, they're now in your will or your trust. Now, I do want to point out that one of the benefits of making beneficiaries designations in your will or your trust is that you can change them at any time. And I think that's one of the reasons why people like to use planned gifts from your will or your trust in such a large proportion of the population, because it allows you, should circumstances change at a later point, to change your priorities. So just because you do it now, it doesn't mean that you can't change it later. In other words, you're not locked in. It's not irrevocable. So if things change and you need to make a different decision, it's there for you to do. Now, I'd like to move on to something that I often think about as probably one of the best kept secrets insofar as a planned giving vehicle that's around. It's one that allows you to give money now. It gives you money back. It can minimize your taxes, and it can benefit the charity later. So I sit here and I wonder, why do not more people do this? And I think it's not something that's really often discussed either by estate planners or by your professional advisors. And it's certainly something, when you hear about annuities, it's not something who sells annuities, whether the ones that you see on television or you read about. They don't often talk about the charitable gift annuity because it's not something that might be particularly favorable to them from a sales point of view. So I'm really candid in that regard. So how does the charitable gift annuity really work? Well, you're the donor. You decide to transfer an asset to History Miami, and it's done in the form of what's called a charitable gift annuity, and it is an agreement. It's a contract. And in the contract, you are promised by History Miami or whatever other charity you're giving the charitable gift annuity to, that you will get money back, guaranteed. It will be at a guaranteed amount. It'll be at a guaranteed interest rate, and it'll be done either on an annual basis, semi-annual basis, or quarterly. And sometimes charities have a minimum amount to do that, but they certainly don't have a maximum amount. And the benefit of the charitable gift annuity by having it in writing is that you have something that's given back to you that you can look at, and it gives you a chart. And it says, well, I would like these payments to start when I retire, or when I'm 65 or 50 or 40 or whenever it is. And you will see from that point forward to the end of the charitable gift annuity period, which can be a term of years or it can be an individual's life, what is the amount you will getting back? And in that chart, it'll also show you that most of the money that you will be getting back on the installments will be non-taxable. A small portion of that will be taxed at ordinary income rates. Now, one of the benefits of why people like to use the charitable gift annuity at the point that they're later in life, say after they've reached the age of 65 or even 70, and that's because those are the income earning years that are less than what you earned during your full employment period. And so your actual income that you're generating during that period of time will be less. And what that means is that whatever amount of money is being added to your income through the charitable gift annuity installment will come at a point where your tax rate is lower. So the tax rate being lower, you'll pay less taxes. And going back to when the charitable gift annuity was begun at the very beginning, you will get a tax deduction for that amount of the gift that you're making. Now, what kind of assets can you use? Well, you can use cash. You could make a gift of a stock. And what would happen is that History Miami would sell that stock and they would place it into the charitable gift annuity. And that is why you're able to get cash back. Some people actually transfer real estate. And in that case, the real estate is sold. The cash that comes from real estate is deposited into the charitable gift annuity. And then that is the cash that is used to pay you back over time. Now, what is the benefit to History Miami? Well, because the charitable gift annuity is sitting in an interest-bearing account, over time, that account will be increasing. And so at the end of the charitable gift annuity period, not all of the money that will have been paid back to you will have depleted the account. So whatever is left will go to History Miami. And so when an individual is helping you make the calculations for the charitable gift annuity, and they're showing you the chart, they will also be able to show you what the projected return is going to be for the museum. And you'll be surprised how the money adds up over time for the benefit of the museum. And you'll be delighted to see what that potential benefit is at maturity. Moving on is the planned gifts that can give you money back. They can minimize taxes, and they can also benefit the charity later. This typical type of mechanism or technique is called the Charitable Remainder Trust. Now, for those of you who have created a trust, you will know that your attorney who drafted the trust for you, and there were certain provisions that had to be included. And then when it was all put together, you review it with your professional advisor. They then have you say, is everything okay? Does it look right? And you say, that's what I want to do. And then they'll have you sign the document. And now the trust becomes a binding document. Now, the trust, of course, can be changed. Some trusts are irrevocable, which means they can't be changed, but many trusts are revocable. The Charitable Remainder Trust is the kind of trust that can be modified over time, but generally, once it's put in place, people don't want to change it. So how does it work? Well, you go to your professional advisor, your tax planning, your estate planning lawyer, and you say, I would like to create a charitable remainder trust. The shorthand terminology is CRT. And I want to make, as a beneficiary to that trust, a cash flow that comes back to me now for a period of time. And I want to get a tax deduction that will either go to me or to my beneficiaries. So this is the part of the trust where you get money back. Now, there are certain limitations about how much you can get back, and that's because the IRS allows the charitable remainder trust to be a tax deductible technique. So you simply can't put everything into the CRT and then say, I want everything back and still get the tax deduction. So as I said, that's part of it you will discuss with your tax advisors and with your attorney as to what the minimum or the maximum is that you can take and what that tax deduction will do. Now, at the end of the charitable remainder trust period, which can be for a term of years or it can be for life, most often people do it for a term of years. What remains in the CRT, that remaining asset, goes to History Miami. Now, here again, it can be cash. Generally, it's something that's income producing because you don't want that CRT to run out of money when you want to be getting some, and you also want History Miami to get something at the end of the charitable remainder trust period. So if it's income producing property, say rental property, you want to make sure that there's enough of an income stream that's coming that will allow you to get cash payments. And at the end of the period, that property can either be sold or it can still generate income for History Miami. So there you have what's called the Charitable Remainder Trust. Moving on to what I would say is kind of like the mirror image, and it's called the Charitable Lead Trust. And what the difference is here is that the charity gets that stream of income back now. There is a potential for minimizing your taxes. And the charity gets, you get the benefit of the return to you later. So how does this work? You take, as a donor, you transfer assets to the Charitable Lead Trust. A stream of income or payments go to the museum. And it's also in the same kind of techniques and the same kind of limitations that you had when you had the Charitable Remainder Trust. There's a minimum and there may be a maximum amount. But the important thing is that you're depositing income, or you're depositing an asset that can produce income. And from that income, payments go to the museum. So the museum gets an income directly. You get an income stream now for the duration of that trust. At the end of that trust period, whatever the assets that remain in the trust go back to you as the donor, or you can designate any other individuals as beneficiaries, members of your family, friends, etc. And there may be some potential tax benefits for them as well when when it's returned to them. So you see the two techniques that we're talking about. The charitable remainder trust allows a stream of income to come to you now with the benefit to the charity later. And then the mirror image of that is a charitable lead trust that provides a stream of income to the beneficiary now, HistoryMiami, and it returns the assets to you at the end of the charitable period. So these are really, really, really terrific techniques to be included in your estate plan. And it's for those of you who can tolerate a little bit more complexity, because there will have to be a document prepared. And some of the times we don't, maybe even most of the time, we don't like to thank the IRS for anything in particular, but they've done a benefit for us here because they have actually prepared forms that are pre-approved forms for charitable remainder and charitable lead trusts, so that your estate planning lawyer can take those pre-existing approved forms and model them for you so that they are made particular for your particular needs. And you don't have to worry about, at a later point in time, the IRS coming back and saying, oh, that's not a good charitable lead trust. Oh, it's not a good charitable remainder trust. And you have to suffer the consequences of a tax problem. We're going to now look at what happens with a life estate. And some people like to do this because you may have a vacation home that's left over, and the kids, you used it when the kids were little, but now no one seems to want to go there. And I don't know about your kids, when mine started growing up, they didn't really want to spend that much more time with me and my wife than they did when they were younger. They want to go here, they want to go there. And so that vacation home is just kind of sitting there, getting a little dust on the mantelpiece. And it's something that you can take advantage of. You can make a gift of that vacation home. Now, the charity gets the title to it, so they're the owners, but you get the use of it for the balance of your life or for the period of the life estate that's been designated. So what that means is the only thing that you have to be concerned with is the general upkeep of the home, and the taxes that you pay, the property taxes and the water bill and that sort of thing. But when you compare it to looking at what the value of that home might be if you're to sell it on the fair market value, and that's the basis upon which you say you get your tax deduction, and you're not really using the home, and you can use it from time to time and still get the benefit. If it's not your second home, but it's your actual home, it's the same benefit for you. You get to live there. You live in your home for life. And at the end of your life, and as you pass by the pearly gates, the charity owns that house, and they can do with it what they wish. They can keep it, and they can use it as maybe part of a program for exhibits, or they can sell the home, and then the cash they get from it can be used to benefit the various programs that the museum has. Meanwhile, the only thing that you've done is you've changed the title to the charity, and it's done through something that's called a life estate deed. And this, of course, would be prepared by your attorney. It's not complicated. It's usually a one-pager, and that's it. You sign it, it gets recorded the same way you would record any title transfer, and then you're on your way. I'd like to move on to a couple of the things that are really important, and that is, how do you decide which plan gift is going to be best for you? Well, fortunately, you have Hilda who can help you answer some of these questions. And to the extent that she has questions, she can bring someone else in, like me, who can help you with that. So there are things to consider and questions to ask yourself. Do you want an estate or an income tax deduction? Do you want to minimize your capital gains taxes? Is there money that you want to donate, or real estate or personal property? Would you like to have income for yourself or for someone else? Do you want to make the gift now or in the future? So yes, you can see these are things that you need to consider. But interestingly, as I've kind of gone through the various techniques for plan giving, there's one can fit your particular needs. You may also find that there are other things that you want to consider. Do you want to have the flexibility of donating a specific amount or an asset or a percentage of your estate? Would you like to be able to reduce your yearly taxable income? Would you like to donate an asset or income that you don't need? For example, you're in your RMD. And the choice to make the change, to change your mind about your gift in the future. For example, your will or your trust. If you wanted to make a percentage beneficiary of the History of Miami or to someone else, and you later decide that you want to change those percentage interests, you're free to do that. And lastly, is it important to you that you leave something as a philanthropic gift to yourself, to the community? Do you want to leave do you want to make philanthropic recognition part of how you plan with your children? Would you like them to be included in your philanthropic giving? And this is one of the ways that you can do it. So the things to discuss with History Miami about making a planned gift. Who should you talk to at the museum about making your planned gift? Well, we've got Hilda. She'd be the person that you talk to first. And it's as simple as writing her an email or giving her a call on the telephone and saying, Hilda, I saw this thing about planned giving on the webinar, or I've heard about it from people, and I'd like to talk to you about it more. Can we set up a time to do that? Hilda will be delighted to do it. The other thing you want to make sure of is a double check, and to make sure that the museum can actually accept your gift. And in that regard, you'll find that the museum does have policies and procedures, and they want to make sure that they can accept your gift as well. Probably the thing that would be least desirable for you or for the museum, for you to make a gift, not tell Hilda or the museum, and when it comes time for that gift to mature, and the museum gets notice that there's a gift being made in your behalf to the museum, that the museum looks at it and says, oh my gosh, we can't accept it. Had you done it a different way, then we could have. And so one of the things that Hilda would like to talk to you about is making sure that that gift can be accepted. Lastly, or not lastly, but in order of the list here is, well, how will my gift be used? You have the freedom to specify something specific. Do you want it to be used for scholarships? Do you want it to be used for exhibits? Do you want it to be able to grow the museums just generally, in which case you would leave it to the museum to exercise its discretion about how that gift would be used? And you might have a question about, well, how does the museum keep track of my gift? Well, one of the ways they do that is something that's called a gift agreement. Now, don't get worried here. It's not the kind of gift agreement that it's a contract that binds you to do something that you don't want to do. It's merely a form that you would fill out, or a couple pager that they might ask you to complete, that allows them to keep track of your gift. So as you're here, as you're there, as personnel at the museum may change, or people may stay, the museum has a record of your gift. And the benefit is they can keep track of you. Knowing that you've made a planned gift, they can include you in their legacy society.
Yes.
They can advise you of things from time to time that are coming about. And I think I'm stealing some of Hilda's discussion here, but I'm going to go right ahead and do it.
We do have a legacy circle, and it's a wonderful society where we just invite you to special events, and just want to thank you and recognize you for your thoughtful gift of planned giving. Mm-hmm. It's not a scary form, like Stephen said.
Yeah.
It's just something simple to help us know how you want your gift to be used.
Yeah. And I think it's helpful for you to know that your gift has been confirmed. and that the museum has confirmed your gift. We have a record of it. And so don't worry about a thing. When the time comes, the gift will be accepted. The last question, I think, is should you include your professional advisors in making your gift decision? And the answer to that is absolutely, definitely yes. And the way to do that is simply you talk to your professional advisor by saying, I'd like to make a gift of a charitable gift to History Museum, History Miami. And I'd like you to talk to them about what it is I'd like to do. And so I'm going to call the museum and I'm going to tell them to expect a call from you, or I can tell them to give you a call. So you will know when you receive the call why they're giving you the call. And in that way, your professional advisors and History Miami can touch base and make sure that you're on the same page and all the I's are dotted and all the T's are crossed and everything is done exactly the way that you want and exactly the way that your professional advisor wants. So there you have it. I think I've probably covered most of it. And I think that there may be some questions. Hilda, where do we go from here?
Well, we do have some questions, I believe. I'm going to ask our staff who is helping us out, that's Gina Valoriso and Danny Gutierrez. I want to thank them. And if you could send Steve some of the questions that have come in, or if you yourself have any questions right now, please type them in the chat and we'll be able to get it right to Steve and he can answer your questions. Or I can too, if I have the expertise, not as much as Steve though.
I see one of the questions is someone has said, can I give from my donor advised fund or IRA to create a charitable gift annuity? Is there a limit and will I have to pay taxes on that? So the first answer is that yes, you can use your donor advised fund and you instruct the holder of your donor advised fund to give that asset, that cash, to the History Museum to create a charitable gift annuity. And when you do that, the same kinds of things will be necessary, and that is that charitable gift annuity agreement will be prepared for you. You'll be able to see what the return cash you'll be receiving will be, and you'll be able to see, what, if any, tax benefit you'll be receiving. Now, keep in mind, if you've already made a deposit with your donor advised fund, then that transaction, that donation that you've made to the donor advised fund, you have already received a tax deduction for it. So whether or not you can actually receive a subsequent tax deduction in your charitable gift annuity is something you'll have to determine. But what you will be receiving is a stream of income for sure. So the remaining question was, how much of that will be tax deductible and how much won't be? And I think the same question, the same thing is, can you do it from your IRA? Yes, you can instruct your IRA repository to transfer that, make a beneficiary of History Miami, or you can tell them to actually transfer the ownership, if you hadn't thought about that, ownership of that IRA to History Miami. That then, whether it's a stock, it's a bond, it's cash, whatever is in the IRA will be converted into cash and it can be created for a charitable gift annuity. Again, there would be agreement to complete. And the benefit, of course, there is that it will confirm to you what you're going to be getting, what you're giving and what you'll be getting. I think that's probably where I can go with that.
Yes, that's great. I actually got a question for me. It says, this question is for Hilda. Does the museum have an endowment? I was asking because I like the idea of giving to something that will support the museum long term. Yes, we do. We do have an endowment. It's we have what's called a general endowment, which just generally covers whatever need is most urgent. And also we have special name funds If you ever want to honor a colleague, a loved one, we can create a fund in their honor in our endowment. And whatever gifts go to the endowment are kept in perpetuity for the museum and for its programs in the future. Do we have another question?
Well, here's one. How do I know that my gift or bequest will be used how I want it to be used if I leave it to the museum? Well, that's a really good question. And you can do it in two ways. The most important way is, of course, is that you make the museum a beneficiary in your will or your trust. And as I indicated earlier, you can make that as a general request, which is whatever you're giving to them, they can use at their discretion. Or you can make it a specific request as to the intended purpose that you want to be accomplished. And to make sure that your gift will be used in the way you want it to be used, we would go back and have Hilda work with you to create a gift agreement. And in that gift agreement, you would be indicating what it is that you're giving, what it is you want it to be used for, and the museum would be signing on the dotted line and guaranteeing to you that, yes, when the time comes and your gift matures, it will be used exactly as you wish it to be used. That's the importance, one of the importances of having the gift agreement and having it done in writing that I mentioned earlier.
Yeah, it's very important because we do want to be able to use the gift for your special request. Well, we've reached the end of our time. So see if there's any other question. Oh, there's one more. Maybe Steve, you might want to do
Okay.
this.
Yes, I
see it. This one about the life estate.
Yes, if I were to do a life estate on my home, wouldn't I exceed my tax deduction for the year? And how does that work, etc.? Well, your charitable tax deductions are always going to be figured as a percentage. And so your life estate, the value of that life estate is going to be categorized as a charitable deduction. And so whether it exceeds the total amount that you can give in charitable deductions for that particular year is something that you would examine and you would discuss with your tax advisor. It might be possible that that tax deduction could be spread over several years, or it might be that you have to do it in the year that you create the life estate. So yes, that's an excellent question, and it's definitely something worth discussing with your tax advisor to make sure you understand how much of a tax deduction you'll be able to get. And does it apply just to your main residence? No, as I indicated, it does not have to be just your main residence. If you happen to have a vacation property or the cabin, or if you happen to own a farm for that matter, and you want to make that the subject of your life estate gift, yes, you can use those, any of those three at least.
Well, I wanted to express our thanks, Stephen, for being with us, and for each of you who've joined us this evening. I want to thank you for taking time to learn more about planned giving, and I hope that you will leave this webinar with a greater understanding of how these philanthropic options can benefit you and your community. HistoryMiami Museum has been telling Miami story, which is your story, for over 80 years, and we could not have done it without the thoughtful support of friends like you who care about the museum and our community. Thank you once again for your attendance. Your recording will be arriving in a few days. Wish you a very wonderful evening, and I look forward to helping you with any questions you have about planned giving. Please feel free to contact me. My contact information is in the chat. Good evening, everyone. Thanks again for coming.